All right, just one moment. Wait to see if we can get Ivan to join us.
I'm here.
And he's here. Welcome, Ivan.
Thank you. I like how you kept me on the phone to prevent me from coming in on time. That's good.
Oh, yeah. Sure. I'm just having a look. I can't see the audience for some reason, but I can see the right screen. People are typing things in. So anyway, that's fine. We can do without that for this session. So thank you very much for joining us today. Any advice contained in today's presentation is general only, doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate to you. Past returns are not an accurate indicator of future returns. Options are risky. If you don't know what you're doing, do not trade them. So welcome to the next big trade session. A little bit of stuff to go through today, and then get into questions and see what everyone else is up to at the moment. We were in bear calls last week. Market closing down. There's a bit of a get out of jail free for me. Not quite enough for you, Ivan, but I still...
Thanks for rubbing it in.
Yeah, well, that's motor racing, right? So I still sort of hold the similar sort of view. I think we're ranging. I don't know. I'm more bearish than I am bullish. I don't really have a lot of technical leads. I think that the stimulus package that the US has put forward is quite extraordinary. It's like beyond my expectations. Ivan, I don't know if you got a view. But they're really flooding a lot of money into the market, right? But
yes.
I don't know how that protects us against companies reporting and making significant losses and all the other issues that are going to come out over the next period of time. So I think we're going to see. That support, that liquidity, propping the market up. There are. I've been talking to quite a few people in the industry, and some people, there are differing views out there, which is great. It's certainly a period of time for a funds manager to actually add value finally, and to be able to, steer you away and towards opportunities and away from problems. I think it's definitely a time where you don't want to be an index hugger. There are opportunities abound, but overall, I guess a lot of the talk's been around stimulus, right?
I think the interesting thing is that on the back of all of that, though, the actual typically, if you look at what's happened in the past, big stimulus packages, not even anywhere near as big as this, but during the GFC, as they've started announcing different stimulus packages, or post the GFC, they led to mass multi-month rallies because people started, trying to get access to better rates and all this kind of stuff. This time around, it hasn't happened. And so, you think realistically, even for our market, we're at 5,400 effectively of the 4,800 point base. Like, that's not a serious rally. So, very interested to see if this continues. I'm of the view that it won't, the way that it's trading at the moment. I obviously, last time I went into a bearish position, I was saying I was going to wait for the market to start showing signals of weakness, and I did ultimately. Just the next day, US started to become a lot stronger. So it was that big red candle was where I got short, and then I think you ended up waiting for a much better time. But this whole kind of touching 5,500, not really convincing moves. There's a lot of volume happening in the background, surprisingly, even though at least I can see it through sort of broker numbers. It's still significantly above what we're used to. People are trying a lot of I guess that shows that there's a lot of retail volume buying into this, and unfortunately for a lot of I've seen this story play out a couple of times, and I just, it's seriously hard to be bullish, or even see the green shoots, as Bernanke would say back in the day, on the back of such massive money pumping into the economy and the market really not rallying too much. I think it's a massive red flag for the next couple of weeks. So yeah, I'm gonna as you know, I'm never afraid to express my opinion.
Yep.
I
Yeah,
think,
so vol's come out, and it could be an opportunity to go long volatility.
yeah, I think that I mean it's scary from a couple of years ago to start thinking 36 vol is good on the XJI, but it is relatively cheap. So if we do get a run down, you get some seriously good value.
Maybe something we can think about, and I'd be interested to see anyone's ideas around this. But I was talking to a group this morning, which I won't mention their name at this point in time because they haven't published their research, but their modelling is suggesting that we're going to see another 20% down in the next 2 weeks. Right? So in 2 weeks from now, they think that, and that must be taking us into sort of US reporting season, is it? When does that kick in?
Yeah, that's just about to kick off. I think, well, it's actually kicked off. Wells Fargo, I think, was it last night or the night before, reported 1 cent EPS, which is way lower than even the revised numbers. So there's going to be a barrage of pretty bad numbers. But having said that, 20% seems pretty. I mean, 20% is very possible, but 20% over 2 weeks.
No. They expect that it's going to be a 20 to 30% fall from current levels, and that fall is going to start in 2 weeks from now. That's their hypothesis.
Oh, okay. Sorry, okay. Yeah, that makes a lot more sense.
They were looking at pricing a trade up on that basis on the volatility, which I'll report back next week on.
I just thought 20% in 2 weeks. Like, whoa.
All it needs to do is what it did.
yeah, exactly. No, I think that chances of a higher vol scenario are pretty good. I think that if we talk about trades, this is something that hasn't been really something that I've spoken about, but I actually start looking at ratios at this point in time, in particular with a bearish view, so that if it's wrong, so I mean the difference between a ratio and a straddle in this case is that you're not exactly expecting volatility to go up per se, but you're more expecting the market to move. It's more of a vol neutral play.
Yep.
And then you minimize your losses if the market rallies, and in fact you might be profitable depending on where you price it, and just not as profitable if the market falls, and then you sort of get that double whammy. So I think that would probably be a trade that's worth really looking at the moment.
Yeah.
Other than that, the play that makes sense to me at the moment is if you've got a your trigger figure, or so you're trying to see what the trade is, or find a trade in this market. I'm personally I'm not putting anything on. I just want to wait for a couple of days, but I think that you'd be probably bearish with a sort of stop around 5,500, and if it goes above 5,500, then you'd expect that it'll pop up a little bit more. But because then you assume continuation of this. The big thing that'll change this, earnings are going to be dreadful. Everyone knows that, and everyone's expecting that. But I think the big thing is that if the Fed has spoken about intervening directly in equity markets, if things continue falling off, I think that will be the ultimate brick wall just to stop the fall. So if they do that, there's going to be a whole heap of anger, and they'll need to deal with that because the Fed has never done that before, as far as I understand. Or maybe they've done that historically during the Depression. But as far as I understand, that they've never done that before. It's unprecedented. They typically only intervene.
I don't know if anyone online has got any more, but again, I don't need to be reading someone else's opinion, but I believe this would be the first time.
Yeah, they've definitely intervened in the bond markets and the debt markets through their primary dealers, but I don't recall. Yeah,
Yeah.
they did. I remember they did speak ages ago. It was the whole central bank conversation during the GFC where the central bank started devaluing or I guess reassessing the real value of gold. And I remember I think it was the Central Bank of Israel was considering buying Facebook shares in lieu of gold, which was just the most bizarre thing I've ever heard of, effectively.
So,
It was just,
on this, and there's a couple of comments here I'll get to, but on the what happens here in Australia? So the Fed can go pump the money, they can go and take, they can buy into stocks, they can do whatever they like. But here in Australia, the domestic sort of conditions around the profit of our companies, the dividend outlook, what's a fair price for the market, what's a fair price for stocks, as we get through and companies start to show what's actually going on. I mean, is that priced in or is it not? And nervousness around all of that, I think that's, we decouple from the US, I guess, is the question.
do you want to ask any more difficult questions? I think, look, the thing that's going to be important about earnings is ultimately we'll get a much clearer understanding of where PE ratios are. Obviously, a lot of fundamental traders look at that. The PE ratios right now look pretty small, but that's because we haven't seen the post-coronavirus earnings estimates. So that's going to be important. Do we follow? Well, I mean, if you get a bunch of money pumped into the US system, then that ultimately feeds through into global financial markets. It'll feed through into Australia indirectly. So, if you're propping up US banks, for example, which ultimately through the primary dealer, they'll start, you start looking at opportunities. Depending on what the US dollar is going to do, Aussie dollar has always been a pretty good safe haven. So you start thinking that, if policy is going to be pretty loose, the US dollar is going to start coming off. So they'll move money around while our rates are slightly better than theirs. So you start getting liquidity in the most indirect ways from a propping up in the market ultimately there. But and then we've also got, if you think about our mining sector, it's pretty exposed there as well. And then you start getting commodities and things like that as well. So if you start getting serious money floating into commodity markets through US dollar revaluations, then you start getting sort of a bounce there as well. So I think that the liquidity, the Fed movements are very much related to what happens here. It's obviously very different, but I wouldn't discount the importance of the Fed pumping in, and I don't imagine correlations would break down. It doesn't mean that we'll go up at the same pace that the US will.
Yeah.
But if US is going up, we'd be following just through the add-on effects. Also, keep in mind that the way that what we've done for coronavirus, I don't imagine that our I like how we never speak about fundamentals and then suddenly we're talking about fundamentals. But the support to the system, I mean, if you think about the pain and the hurt that we've been through here, it's nothing like the US. I mean, obviously there's some sectors that are extremely beaten up and bruised, especially travel, hospitality areas, education sector, or private education, childcare centres, that kind of thing, have been annihilated in many ways. But having said that, there's been so much money on the sidelines. You see this in the deals that are coming through. There's placements going all right, left and centre. There's SPPs that are getting generated. So there's plenty of liquidity. And in fact, speaking to some of the larger brokers, they're angry that they're not getting allocations. So they're all fighting to go on and fill this entire massive requirement for funds. So from, corporate markets are still liquid, surprisingly. I don't know if you've got a different view on that, but from what I'm hearing, there's lots of stuff going on, and it just goes to show how many people were sitting on the sidelines over the past 5-6 years just bouncing on the opportunity. Obviously, I just, I've been engaged in some of that activity myself, but Yeah.
Yeah, look, and I think you make a good point that we don't talk about fundamentals that much, and here we are talking a lot about it. And I do think that a lot of, like, we're just pontificating, right? So this is just like everyone, it's noise, it's hot air coming in from us, but it's good to think about some of the things that are happening around the markets that are impacting what's going on or that may impact. But it comes back, Paul's just made the comment, the markets often do what everyone's not expecting because everyone is anticipating a downturn, large downturn. Do you think that gives any weight to a downturn not happening? And Paul, I think that's a good comment, but there are a lot of people expecting that this is the bottom as well. So it's balanced out. I mean,
a lot of people.
a lot of people, in fact, probably the majority of people at the moment think that we're talked to are predicting
Retail, I should clarify. Majority of retail, I've seen lots of volume.
Retail market, I was reading, I think Macquarie yesterday was saying they've gone from being sellers into strengthers, into buyers, into weakness. It's an interesting sort of positional change. So, yeah, look, I don't know, and I think we should just be looking at it and looking at, is 5,500 a pivot point? And then at what point do you actually say this is a bullish run? Something goes. So, you've got to be looking at both sides of the equation, looking for the opportunities. Brian just made the comments. As I understand, it's supposed to be illegal for the Fed to buy stocks. Okay.
Yeah, there is a whole there's a whole piece of that's definitely correct, but there's a whole heap of stuff that they're looking at in the Constitution around doing that. Which is why they've never directly intervened, and you can understand why, if they did start intervening, why there would be such a massive problem for them, because you start thinking, these guys, remember the Americans are up and down about weapons being taken off them because it's a breach of their freedom and their rights. So if the government or a government-related body starts interfering in the stock market, all I'd say is that for the next couple of weeks after that happens, the most entertainment is going to be occurring on Zero Hedge in the comment section.
Yeah. Hamish made the comment they're thinking about using an SPV to do this. So
Well, the way they intervene in the bond markets is via their primary dealers that are effectively obligated to carry out their instructions. So. It's the American monetary system is an extremely interesting beast, but I think that that have to go on and skew. But it's more the principle of it that's going to be the bigger issue. I mean, they've already got vehicles like their versions of the 401k to their super fund structure. I mean, effectively, they're all long-only funds anyway. So,
Paul asked what's an SPV. It's a special purpose vehicle. So it's just something specifically put together for that purpose, Paul. So
I believe you've toyed with one of those recently, Patrick.
Yeah, we've got a few SPVs. All right. So in terms of trades that are out there, sort of things that are going to be meeting our breakout rules, there's nothing really sitting there at the moment that's meeting breakout rules for sort of that period. Ivan, is there anything else that you're seeing? I mean, ultimately you've got to have a view. So I think I'd probably be waiting, like you, for vols to drop a little bit further than they are now. But I think if nothing major has happened over the next couple of days and we can see volatility coming off towards, another 20% or something like that, it might start to be interesting to have a look at something there. Maybe a long strip next week, Ivan.
I think it really depends as to what the next couple of days do. I think and it also depends on your view. I mean, if your view is that this is it, the markets, if best case scenario, it might touch 5,500, might not even touch, and it's just going to tumble down, and it's going to lost its momentum. It's a dead cat bounce. Then these things can unwind pretty quickly. especially if you start getting some higher volume selling. At the moment, we haven't seen it today. Market end was lower. Now that everyone's kind of just sitting there going, what is it? Is it real or is it not? So now we're sitting in this. So I think that if you're thinking that it's going to come off, if that's your sort of thinking as a trader, then I'd get onto a trade sooner rather than later.
Yep.
Because vols can be up to 50, 60, 70 pretty damn quickly. By this time next week, you know, we might be looking at our own condors of sold spreads again. But while that's all going on, what we've got at the moment is, you know, but if you're thinking the vol's going to come off, which sounds like which is where you are, then on that basis, I would say that you would probably wait. There's really no value in not in speeding up. If you know, if you think that the market's going to stay here or go up, you might as well get some time decay, wait for vols to come off, or do whatever it's going to do, and then see, and then get into the right trade.
Yeah, and that 50-day moving average is coming down as well, which will make it
Yeah.
interesting. I'd like to go a little bit lower. But yeah, before people are going into something. Jensen,
I think that I was just going to go. I think that's a major reason as to why the sell-off stopped accelerating or just kind of suddenly stopped. It's just the market needed to take a breather, and everyone started realizing, you know, wow, this has been fast. No one expected it to be so fast, and whoever needed to unwound, and now it's just a matter of market catching up a little, catching its breath a little bit, and then figuring out what's next.
We're putting a trade or an investment together at the moment, which will be on US tech stocks, and it'll be a similar functionality to that optimizer trade we did last month, and so that will be one where we go long US tech. We have that look back function, so it allows us to take the best close of month over the next 6 months. If they stimulate and things get up and, you know, IMF are correct or whatever and the market's back up at the highs, it means that you're in and for the move. If there is a major, you know, if our friends I was referencing earlier correct and there's another 20% off, then it allows us to take an entry point at those lower levels, and focusing on tech. We've got a few reasons around that, but that's something that we're going live with at the moment. So next week, I think we'll run a webcast on that. I think the dates will come up. But if anyone's interested in what the PDS or anything like that, just type yes into the chat box. We'll get that sent through. But that's another interesting one. I don't mind that structure. We're sort of working with the IB on that one. Because I think that certain things will come out of this a lot better, but there are certain, you know, I think it is a time where you focus on a sector or on particular stocks. Okay, so Brian has asked about A2 milk. So let's have a look at this. And any thoughts on an 1850 straddle A2 milk? So interesting. Brian, is there reporting or anything coming up on that? Oh. Okay, not sure on the reporting side. Long straddle. Imagine 42 days, Brian. Oh, Natasha, okay, yeah.
Just realised I was on mute. I was going to say, it looks pretty.
Strangle instead of straddle. Sorry, I'm trying to multitask. It never works well for me.
No, it does not.
Yeah. Okay. All right. So here you go. 28th of May expiry, Brian. Yep. Okay. Brian said yes to that. maybe we can go into Matrix.
$2 is a bit expensive, but
Volatility. Yeah. 41. I mean, it's probably not too bad on the volatility, really. I've got to get those columns, a bit more time increments in there for this to be more helpful. But let's have a look at volatility. So volatility jumps up back up to where it was. That's 50% increase. So, you know, that works quite well. No. Maybe I do. All right, so let's say you went into the trade and you're expecting a 50% increase in vol. You were happy to put max loss up there at 10K, but you were aiming on getting out after 15 days or something like that. Yeah, I don't mind that. I think that's an interesting trade. Rowan. Okay, Paul suggest selling in April 18 and at 19. We can play around with that. Maybe I'll copy this. All right, there's another scenario there. Yeah, I think you could play around with that. Obviously the vols have a bigger impact there. Let's bring it down, 20% increase. So if you think there's volatility could increase here, move that price increments down. Yeah, that's an interesting trade there. Have a play around with that. Paul, don't mind your suggestions. So there are trades like that you can start playing around if you think volatility is potentially going to go for a bit of a move on any of these things. If we go back to the chart, I don't know what your view is there, Ivan, but I don't know. What are we looking at? 1 year chart. It's a weekly. I guess it's just do you expect, Brian, that that if the move continues up, then we're probably going to see some volatility come out, and it's not indicating you're at a pivot point at the moment. So I don't know if it continues to run. The only issue would be if you consolidate at the levels we're at now, that would be problematic. So if there's some other thing going on that might drive A2 milk to go down, or for it to continue to go on its strong run, that would be your view there. Andre has asked the question about, based on where vol is at the moment, is it too late, too early to place a long straddle on the banks prior to interim reports at the end of this month? So we did look at ANZ last week, and volatility hasn't really done much there, has it? Yeah, that's an interesting one. It wouldn't appear, if you think that volatility will rise into reporting, that the volatility hasn't risen so far. So by going in now, you probably would be benefiting from some time decay that would have occurred. So you'd probably be, not too late to get in, I would think. Ivan, any opinions?
Honestly, I don't have an opinion on it.
Yeah. Fair enough.
I mean, it's not something I've looked at too closely.
Yeah, fair enough. AZ has normally hung around, 1650, as has IV. Yeah. So Brian, who had that trade on, I think I priced it last week, but didn't quite fall in love with it enough. It is hanging around. It is consolidated at these levels, and so that volatility has gone up slightly, whereas normally that consolidation probably would have seen volatility come off more. That's probably the counteraction of the fact that you're going into that reporting. It's an interesting one. Just with volatility being high and not much happening on the share price, probably doesn't bode well for ANZ, but I'm not sure.
Did anyone get into the March iron condors for ANZ on the line? That'd be quite interesting because there's a couple of iron condors that came up for banks, and 99% sure ANZ was one of them. That obviously would have been pretty awesome.
Yeah, we had our Afterpay iron condor that we spoke about 2 weeks ago. What were the levels on? It was sort of up at $34 and down at 16 or something like that, wasn't it? Anyway, that was all right. If you could have got filled, that would have been the problem. I think he was suggesting tightening the spread on it, but I don't think that would have been the way it would have been.
That was about 3 weeks ago, wasn't it? Yep. Yeah. Or 2, I don't know.
So I think, there's an interesting period. There are trades coming up. There are definitely levels. There's plenty out there. I think that the next couple of weeks are going to be an interesting time for us. I don't know. I'm going to be playing around with some stuff. I'm not quite ready to go in today into anything, but over the next couple of days, we'll have a look at what volatility does, and then maybe take some positions. We'll report back next week. We're doing something around that the optimizer, the tech trade. We'll do a webcast on that next week. I'll advertise that in the morning report over the next couple of days. Probably send an email out and explain exactly how that's working. Next week I'm working on having a market maker join us for the those that can do session on Tuesday night. If not, it'll be a funds manager. Okay, Craig's asked, can we briefly explain how an iron condor works? I can certainly do that. So why don't we go to the strategy builder, and
just while you're doing this, I've actually got to drop off into another call, unfortunately.
Yep.
Are you any final questions for me in there? I assume not.
Negative. I'll speak to you later, mate.
Perfect. Thanks so much, guys. Catch you next week.
Okay, so someone was asking about, Ivan mentioned Iron Condor and ANZ Bank, so Craig's asking how they work. There are some videos on iron condors. We've done a whole bunch of research on iron condors, but the simplest thing to do is to go into the options cookbook and type in iron condor, and in here where it says learn more, it'll explain the strategy in a bit of detail for you. So, clicked outside. Iron Condor. To go Iron Condor, where it says learn more, just click on that. And in here we can see neutral. We want the share price to be between B and C, but there's profit between these two ranges here. Right, so we want the share price ultimately to finish within a certain range. It benefits from volatility falling. It benefits from time decay. The maximum profits where it's between that B and C point, but obviously we can make a profit a little slightly wider than that. And a maximum loss is between the A and D level. All right, so we do the trade when we expect it is going to go sideways. So let me close that down. So if I want to do the trade, I could simply go in, put in Iron Condor, click on to expiry. I'd probably go to 42 days. You can play around with, there's a bunch of factors that will impact that, and we go create strategy, right? And so effectively it's a bull put and a bear call at the same time. So we're selling a call at a higher than current share price and buying a call higher than that again for protection. And then we're selling a put at lower than the share price and buying a put underneath that level for protection, all right? And effectively what we wanted to do is to stay between a certain range, right? The simplest way to really understand this strategy or any strategy for me is just to go into the price matrix, and I can see, okay, well, if the share price goes up 1% or down 1%, I'm making profit here, all right? So I might need to take it out 2%, and I can go 3%. All right, so I can see that if it goes up 3%, 6%, 9%, 12%, or down, I'm still making money on either side of the range, right, Craig? So that I guess gives you a feel for what you want to happen. So then what you would do is you'd look at a chart at the same time, and sort of maybe look at it over this period of time and say, well, you know, if the share price goes up to, you know, this level or down to that level, you know, whatever it might be, I can see whether, you know, what are we down at 14.50 and we're still making some profit down there. If I expect ANZ to stay within this range, then I'll make money. And you don't have to stay in it all the way through to expiry. As you can see, time is decaying and working in your favour, you know, you can take it through. So Craig's asked, do you sell out at expiry or let it run out? Look, it depends on a range of things. The way that we trade iron condors generally is if there's a lot of iron condors around, we'll do multiple positions, and we'll generally be staying in them through to expiry. But there are certain, you know, there's a range of factors that would impact whether you would stay in there. At the moment, with volatility being, you know, high relative to where it's been in the past, you know, if volatility can drop down further, then you can close out of them and take really good profits over shorter periods of time. All right, but a good way of playing around with this is you can go through and just, I like looking at it with the matrix. I find that's an easy way with iron condors to be able to look at, well, what's the impact of time decay and what happens to the day, or how much money I'm making based on the share price move. So that's one way of doing it. And, you know, obviously with this, you know, the ANZ share price could go right up and then come back. What you want is that, or it could go down and then come back up. As long as it finishes within that range of $15 to $18, that kind of broadly that range, then I'm making my maximum profit on expiry. But there are other opportunities to close out of it earlier as well. So there is a whole bunch of education we've done on that. We've done heaps of research on iron condors, and there are iron condors out there. We've done a few iron condor trades ourselves and done quite well out of them. If I'd been paying more attention, I would have been in an iron condor even more recently. I've bought in that bull put level, but just didn't get around to it. So yeah, I think there's been lots of opportunities to sort of in the current market as we sort of edge sideways to play around with either you know, edging ourselves into the market. Fees per leg $24.95, Sam. All right, as I said, and that's one of the benefits of trading with our platform, Sam. If you're not familiar with it, if you wanted to do this trade, you can trade it online, just go execute strategy, play around with your pricing and click it through straight into the market. So you don't have to pick up the phone and speak to a broker, spend, you know, a whole bunch of money with the online guy, with over the phone. You can trade it online at discount levels, which means that, you know, where historically someone might have been spending sort of 400 in and out on an iron condor or more, depending on what their fees are. You can sort of get in there for $100 and out for $100, you know, plus some ASX fees. Okay. Anyone that's new and that's coming along to this session that would like to get a trial on the platform as well, just let us know. Type in trial or yes, whatever. We'll get you set up for a 30-day trial. Otherwise, guys, we'll be back Tuesday night. Sort of either be a market maker. I'll advertise who that's going to be. Okay, Rowan, the other night Graham O'Brien talked about a stock repair trade. Can you please show us what that would look like, setting up the strategy legs, bull call spread with a call at a higher price if you're happy to sell at memory? What I might do, Rowan, is to get Graham to give me the slides that he did on that. I'll send him a text on it now, and I'll email them across to you, Rowan, and I'll just go through it because there's a strategy behind it. It's one that I've done in the past, but probably back in 2009, 2008 time. I haven't looked at it since we were doing more advice work. So let me get that for you, and I'll send it across, and I'll run through it next week on the session as well. Beautiful. Okay, guys, thank you very much for coming along this week. Any questions, come back to us. For those of you that have requested a trial, we'll sort you out if you haven't already requested so. When you leave the session, please give feedback. And next Tuesday night, we will have either a funds manager or a market maker. But at the moment, I'm working on a market maker. I would love to get a market maker on so you guys can ask all the questions that you've got for them, and you can hear a little bit about their world and what they've been going through as well. Beautiful. Thanks, guys. Have a wonderful day, and we'll speak soon. See you next week. Ciao.